Hey guys, okay, I think we can go for now the second part of our journal topic, whereby I think I can complete now in this lecture for the whole journal topic. Of course, here we are going to see ICAI material also, and let us see the illustrations and also examples if there are any. But before going to this, ICAI material, I would like to discuss you with two type of approaches of accounting. What are those approaches? Of course, I have introduced with you personal account, real account, and nominal account. Right. This is one type of approach. What this approach is known as? This is known as traditional approach. This is this is the approach through which we are going to use our golden rules of accounting. What are those golden rules for us? Personal account rule: debit the receiver and credit the giver. Real account rule: debit what comes in and credit what goes out. Nominal account rule: debit all expenses and losses and credit all incomes and gains. So this is a type of approach which is called as traditional approach. This is Puran approach. The approach which is used in previous days, but nowadays we are using accounting equation approach. Of course, both approaches can be used to solve to create our journal entries, or I can say to write our journal entries. We can use any of these approaches. Accounting equation approach is also one more approach. This accounting equation approach is also known as modern approach. Accounting equation approach is also known as modern approach. What does it mean by accounting equation approach, or it is known as modern approach? The name only says there will be some equation. Of course, for accounting there is some equation which is known as assets is equal to capital plus liabilities, or assets minus liabilities is equal to capital. These both are equal actually. These both are same. One difference is that I have added liabilities towards right side now, that is to the capital. And if you don't want to add liabilities to the capital, then you can separate liabilities from assets to get capital. This is the accounting equation approach, whereby there will be some items which is known as assets, liabilities. There are three items here, right? Capital. These are the three items which are used to classify. Okay, this accounting equation approach enables us to what I can say, to know the nature of accounts. I mean, I'm not talking about personal account, real account, and nominal account. I'm going to talk about that whether it is an expense, or whether it is an income, or whether it is an asset, or whether it is a liability, or whether the item is related to capital, or it is related to drawings. There are some sort of question in this ICAI material through which we are able to solve the accounting equation approach, and we are going to classify the nature of the accounts, whether it is liability or asset, capital, expense, income, losses, gains. All these are there, right? With which we can know whether we are required to debit the transaction, or we are required to credit the account in the transaction. Okay, now let us go for that one now. Okay, let us see the ICI material, and let us see where the accounting equation approach is used. We have discussed about this double entry system. I have completed this double entry system, so I am going to tick that one. See, this is an accounting equation approach. Assets is equal to capital plus liabilities. I'll denote with red mark. Assets is equal to liabilities plus capital, or assets minus liabilities is equal to capital. This is what I have written, right? So in detail, if you are required to know about the capital, what are the types of capital now? Simply, this capital is simply used to denote many of the concerns, like a sole proprietorship, it will be used. If you go for partnership, that will also be used. But in case of company, that will be used in different manners. Okay, and of course for sole proprietorship, it is simply known as capital. For partnership, it is known as partners capital. And of course, this capital is somewhat again bifurcated into fixed capital and fixed capital, and I mean capital, and it is also bifurcated into capital accounts and current accounts. In capital accounts, number of transactions will not be there. In current account, there will be many number of transactions. But in case of company, there are two types of shares. I mean, capital is divided into two type of capital, which is preference capital and also equity capital. I think you know about preference shares and equity shares, and of course, in detail we are going to learn in company accounts. Now, what it is mean by capital here? This preference capital or equity capital is nothing but this is the capital which is owned by the members, right? Members, or we can call them as shareholders. Then the shareholders may be of two types, right? Preference shareholders and equity shareholders. Preference shareholders and also equity shareholders there may be there. So they're also known as stockholders. Stock in the sense, what the stock to the company is like shares only. Shares, somewhat shares are similar to stock in the company. Thereby, stock is nothing but what the preference shareholders and equity shareholders can be called as stockholders also. Therefore, the capital is again classified into stockholders equity. You can see here. Assets is equal to, what is our equation of what is our equation now? Assets is equal to liabilities plus capital, right? Then the capital is like treated as a stockholders equity capital and preference capital. Usually when we deal about capital in our accounts, then that will be maximum. That means equity capital is mostly used, so it has been replaced with stockholders equity. That means equity share capabilities. And of course this shareholders, you can see the bifurcation here. That means you can see how they have been explained here. Contributed capital, that means the equity capital, the stockholders equity is known as contributed capital plus beginning retained earnings. Beginning retained earnings in this retained earnings in the sense what? General reserve, P&L, security premium, etc. These will all also be coming under company accounts. We are going to deal in company accounts also. Beginning retained earnings is nothing but previous year earnings. Yeah, of course we know. Original capital introduced by the owner is known as contributed capital. Revenue generated from ongoing business activities. Yeah, revenue is also known as what? Income. Of course, there is some difference between revenue and income. That is somewhat different. Expenses, you know about expenses, cost incurred by for the operations of the company. Dividends, earnings. Dividend is nothing but what? It is earnings which are earned by the shareholders of the company, distributed to the shareholders of the company. But of course, this will not be not much important up for now. Then there are some transactions here. Okay, we can see about these transactions now. Started business with cash rupees 10 lakhs. What is that cash? What does this cash mean? Cash is a real account, and of course under real account there are two types of items, which is assets and liabilities, right? Thereby what we can say, Cash is like an asset right now. Then for this only one transaction, can we say that cash is the only asset? Yes. Therefore, the total assets is like what? 10 lakh rupees. Then we are not having any type of liabilities. Whenever we are going to start business with cash, what is the journal entry we are going to record? Cash account attached to capital account, right? That means the capital account is filled with 10 lakh rupees, and also we are going to fill cash account with 10 lakh rupees. That means increase in capital, that means increase in assets and also increase in capital, it has been there. Whenever we are going to debit some, that means whenever we are going to increase our assets, then we are going to increase our liabilities also, so as to balance the balance sheet. I think you have understood this point. What does it mean now? Whenever you have introduced some cash to the business, then business is also receiving the capital, right? Business is receiving the amount. Then business is liable to pay back to the person that is sole proprietor. Then the liability has also been increased in the form of capital. Whereas whenever we are introducing cash to the business, then assets have been increased by rupees 10 lakh rupees. That is the only asset we are having now. Therefore, total assets value is 10 lakhs, and also liability, that is capital, is also 10 lakhs, because it is the permanent liability. Liability is also 10 lakh rupees. Whenever we are increasing the assets, we are also required to increase the liability to balance the company, to balance the balance sheet, or you can say balance the business. That is the important action here. Borrowed rupees 5 lakhs. So it has been given that there has been some borrowings. Borrowings is nothing but what? Outsiders borrowings. That means we are asking someone to give money to us so that we can pay back to them. Of course, with interest we are going to pay back, right? Then can I say, when we are borrowing, when we are doing some, when we require some borrowings, then can we say that this borrowings is somewhat like liability? Can I say this borrowing is a liability because we are borrowing some from other person and we are required to pay back to them? That means it is liable for us. There is a liability to pay back to them, right? Then can I say that there is an increase in liability also? Whenever we are requiring, whenever we are increasing the liability, I have also said you that we are required to increase the assets also. But how we can increase the asset? Because when you are taking the borrowings, in the sense you are taking in the cash, so cash is also coming in, right? Or you can take the same value in the form of a check also. That means in directly debiting the bank account. You can directly debit the amount to the bank account, right? So with this transaction, simply for one transaction there will be double entry that you need to require. You are required to know. That means for every transaction there will be some debit and there will be some credit. When we are doing the borrowings, when we are asking borrowings, then the liability has also been increased, right? Then also cash is also coming in of rupees 5 lakhs here. So what would be the entry for this one? Borrowings entry. Simply cash is coming in, right? So cash account debtor. Debit what comes in according to real account rule. To what? To liability account you are going to credit it one, because borrowings is also liability. Or if you are not required to write liability account, you can also write borrowings account. That means here also we have increased the assets, or and we are also increasing the liability. Whenever if we are required to increase the asset, increasing asset means debit. That means we are adding to the assets, right? Asset balance is what? Debit balance. If we are increasing the asset balance, then does that mean that we are increasing the debit balance? Yes. So increasing asset balance means increasing debit balance. When we are increasing liability, then that means that we are increasing the liability balance also, that is credit balance. Assets balance is what? Debit balance. Liabilities balance is what? Credit balance, right? Then increasing assets will also lead to increase in liabilities. That means we are increasing the liabilities also, and also we are increasing debit balance also. So increasing asset we are required to debit, increasing liabilities, we are required to credit. Then what about if you are decreasing the liability assets? If you are required to add the asset, we are going to debit the asset transaction, right? We are going to debit to that asset account. When we are required to reduce that asset account, then do we require to credit the transaction? Yes, we are required to credit the asset account. Credit the asset account we are required to do. Credit asset account. There, whenever you are increasing liabilities, then does it mean that we are decreasing our liabilities? That means when we are increasing our liabilities, we are going to add to the credit side of the account. That means we are going to increase our credit balance. Whenever we are required to decrease the liability balance, that means we are decreasing the credit balance. Then if you are required to decrease the credit balance, you are required to debit that account, debit that liability account. This is somewhat like a accounting equation. This is a simple accounting equation. That means accounting equation says only one thing. There is what is our accounting equation now? Assets is equal to liability plus capital, right? Whenever asset is increasing, then liability, this capital might be increased or liability must be increased. Why we have bifurcated capital and liabilities? Because capital is the only one thing which is brought by the person, that is sole proprietor. And if you are doing any sort of borrowings and we are having any creditors, then we are going to add to the liabilities only. This is known as current liabilities, or you can say, of course, these liabilities are also bifurcated into two types: short term liabilities and long term liabilities. Whenever you are increasing the asset, then you should increase liabilities also. When you are increasing the asset, then you might be increasing capital also. This is what accounting equation says. Decrease in assets will lead to decrease in liabilities. Then simply what I can say from the second transaction, borrowings are made, borrowing rupees 5 lakhs. I'll erase this one. Borrowings are made rupees 5 lakhs. Borrowings in the sense, what is the entry we have written now? Cash account debtor to liability account, right? Or to the borrowings account. That means we are increasing the assets and we are also increasing the liabilities. So I have increased the liabilities and I have also increased the assets. Withdraw cash from business, rupees 2 lakhs. Whenever here what we are required to assume, here we are required to assume that we are using that same value from personal use. Withdrew cash from business, in a sense we are decreasing the cash account, right? From the business, if we are withdrawing the amount, then we are decreasing the asset balance. That means we are decreasing the debit balance. Whenever we are withdrawing the cash from business, what is the entry you are required to write? Drawings account at to cash, right? Drawings account at to cash. That means cash is decreasing. And what is this drawings? We are drawings is, of course, this is debit balance. Drawings will be having debit balance, but at last you are required to subtract these drawings from capital itself, right? That means what I can say that the capital is also decreasing when we are withdrawing the amount from for cash. When we are withdrawing the amount from cash for personal use, can I say that capital is also decreased? Yes, because the drawings are, at last we are required to what? We are required to subtract, or we are required to less from capital, friends. That means we can say, when we are doing drawings, when we are withdrawing some amount for personal use, can I say that it is also like decrease in capital? Yes, absolutely. Therefore here, withdraw cash from business purpose. From business, I can say that it is for personal use. Okay, whenever cash is withdrawn from the business, then can I say we have credited the cash account, right? That means we are crediting that asset account. Then means that we are decreasing the debit balance, we are decreasing the asset balance. No, if you are decreasing the asset balance, that's why they have made minus 2 lakhs here. You can observe here. There also, after that, what they have made, they have also decreased 2 lakh rupees from the owner's capital. They have also decreased from owner's capital the value of 2 lakhs. Then what here? Let us assume, let us observe the fourth transaction. Loan repaid to the extent of rupees 1 lakh. I'll write this transaction rupees 1 lakh. Okay, I'll write this transaction loan to the extent of 1 lakh rupees. Okay, I think it is not visible now. I think it is visible for you now. Loan repaid to the extent of rupees 1 lakh. Then what does it mean? We are repaying the loan. That means we have taken the borrowings, right? Borrowings have been taken for rupees 5 lakhs, from which we are repaying the extent of rupees 1 lakh. The quantum of rupees 1 lakh we are repaying. Then can I say that repayment of loan is decrease in liability? Can I say that repayment of loan or repayment of borrowings is decrease in liability? Then if you are required to decrease the liability, then what we are going to do? We are going to debit that liability account. How? Simply borrowings account debtor, debit, and loan repayment is made. That what does it mean? We are repaying our assets. That means we are decreasing our cash balance, and we are paying some sort of cash of rupees 1 lakh to that the persons from whom we have borrowed the amount. That means, can I say that it is also decrease in asset balance? Yes, of course, because from our cash only we are taking some sort of amount and we are repaying that amount to that borrowing, to the person from whom we have borrowed some value of amount. Out of 5 lakh rupees we are repaying the amount of rupees 1 lakh. Then it means that we are decreasing our assets by rupees 1 lakh. That means from our own resources of cash we are decreasing 1 lakh rupees. Then decrease in asset, that we are required for decrease in asset, we are required to credit that asset account to assets account, or I can say cash account here. So therefore you can see that we can link both accounting equation and traditional approach. Modern approach and accounting equation approach, we can both we can do simultaneously. We can describe both things without of accounting equation. How? So cash is going out, we can credit the cash account by sort of real account. Borrowings, in the sense what we are paying the amount. Borrowings is like personal account, right? Why? Because that person, the person who has started the business, he has asked some others to give the loan. Then borrowings is the personal account. The person who is receiving that amount is the receiver for our transaction. So we can say that this is personal account. No, debit the receiver. So person who is receiving the amount is a receiver. So we have received we have made that person as a receiver by name of drawing per borrowings. So can I say that it is also like a personal account and real account rule has also been used? That means we have used traditional approach also here. Decrease in liability, debit side. Decrease in assets, credit side. Increase in liability, credit side. Increase in assets, debit side. So from this approach, can we say that when we are repaying the amount of rupees 1 lakh, can I say that assets also been decreased by 1 lakh rupees? Yes, liabilities has also been decreased by 1 lakh rupees. Okay, then bought furniture rupees 3 lakhs with cash. Simply I'll write the same transaction in the other side. Bought furniture with cash rupees 3 lakhs. This is the transaction, right? Then can I say brought furniture with cash, in the sense furniture is asset, so asset is coming in, Asset is coming in the sense what we can write down the entry, debit what comes in, asset is coming in, so debit the furniture account. So furniture account debtor to what we are paying our cash, our resources. So cash is going out according to real account. Cash is an asset. Whenever asset is going out, credit that asset account. Or I can say cash is going out, so credit what goes out account to the real account rule. So to cash account is the rule. With this, we have also understood one point, that whenever there is an increase in liability asset, then there must be decrease in asset also. There might be, that means accounting equation approach is balanced with these three transactions. Up to now we have seen three transactions. What are those? This is our accounting equations, right? Account assets is equal to liability plus capital. Increase in assets will also change the liability capital that to increase, or increase in assets may increase in liability, decrease in assets may decrease in liability, decrease in assets may decrease in liability. What are the examples for this? Introduction of cash to the business, cash introduced to the business, that means we are increasing our cash account, also capital account we have increased. Then borrowings made for this one. See, you can see that with this example they have explained you in a clear manner how the accounting equation approach can be settled, right? What is this in here? Borrowings made, borrowings in the sense what, increase in liability and also increase in cash, because when we are making some borrowings, that means cash is also receiving in, and also we are increasing our capital, which is a liability. That means increase in assets will also lead to increase in liability, where we have decreased here. The borrowings of 5 lakhs we have out of the borrowings of 5 lakhs we have repaid 1 lakh, right? That means our cash account is being credited because 1 lakh has been decreased from the cash account. So in order to decrease the cash account, we are going to credit the cash account, and also the liability will also be decreased by sort of 1 lakh rupees. So we can debit that liability account, because decreasing liability is in the sense we are decreasing the credit balance, decreasing credit balance in the sense debiting the credit balance account. Then assets will decrease, when decrease in assets might also decrease in capital. Drawings for personal use, drawings for personal use in cash. Whenever cash is withdrawn from the business for personal use, we will be crediting our cash account, and that means we have made some decrease in cash account. Now decrease in cash account is there, then we have decreased our capital account, because we are making drawings from the capital itself. For personal use we have made, right? So this might also be leading us. And one more thing, increase in assets will also decrease in capital assets. That means they are all occurring simultaneously. They occur simultaneously, they are occurring simultaneously. And here what happened, furniture has been purchased, furniture purchased through cash, right? Furniture purchased through cash, rupees 3 lakhs. Then can I say the furniture asset account has been increased, because one more asset is coming in into the business, furniture. So can I say assets account has been added now? Okay, then it is purchased through cash, in the sense what it is, we are decreasing simultaneously, we are decreasing the asset account by rupees 3 lakhs. Then my question is, will there be any difference in the asset balance? No. My question is, will there be any decrease in the asset balance, or will there be any change in the asset balance? No. Why? Because increasing assets by rupees 3 lakhs, that means what we are doing, let us assume this is the asset account balance. No. What is the balance here? Okay, asset account, let us suppose we are purchasing the asset account, means we are going to debit the asset account by rupees 3 lakhs. and we are decreasing the cash. That means what? We are decreasing the cash account by rupees 3 lakhs. Total is 3 lakh rupees. Total 3 lakh rupees. Will there be any change in our asset account balance? We have debited the asset account and also we have credited the cash account, asset account. Then there is no change, right? Increasing liability, increasing assets and simultaneously decreasing the same asset value. Then there will be no change in our accounting equation. This is our transaction. Why they have debited and we have, you can see here now, brought furniture worth rupees 3 lakhs with cash. They have increased the assets account and also they have decreased the assets account. Then what would be our solution? We are required to do what? Assets is equal to liabilities plus capital, right? Then we are required to know what is the total of assets and what is the total of liabilities and also the capital. And we are required to match this accounting equation so that it is proved that it is correct. Therefore, we can see here, you can do this total. Then it will be what? 12 lakhs. Borrowings made 5 lakh rupees and out of which 1 lakh has been repaid. Then the balance that would be available will be 4 lakh rupees. And out of the 10 lakh rupees, 2 lakh rupees has been withdrawn for personal use. So 8 lakhs has been remaining. So 8 plus 4 is 12 lakh rupees. Then the assets account amount which we are having is what? 10 lakhs plus 5 lakhs. 15 lakhs minus 2 lakhs is what? 13 lakhs minus 1, 12 lakhs, right? Plus 3 minus 3 is cancelled. So from this only we can say that it is 12 lakh rupees. So assets also balanced. Can I say that this is a balance sheet? Where in balance sheet what we are going to do? In balance sheet we are going to write here assets balance and we are going to write here liabilities balance, and there also we are going to match this assets and liability, and this liability side is also dealt with what? Capital and other liabilities. So it is also known as balance sheet, friends. So accounting equation approach is also known as balance sheet. Why? Because the total of assets should be matched with the total of liabilities. The liabilities will also include capital and other liabilities also. What are the examples for other liabilities? Other examples are liabilities. Examples for other liabilities is known as borrowings, or you can say loan, overdraft, bank overdraft, creditors, bills payable. Example, these are all the examples. And here what are the examples for asset? Furniture, old plant and machinery, new plant and machinery, loose tools. Loose tools are like an asset, no fixed assets. It is also, we are also having tangible and intangible fixed assets. Of course that is somewhat you can learn by the time you can complete the accounting journey. Same transaction is made by showing the balance sheet here. Of course they have written in the asset side in the debit side, and that means in the left side, and they have written capital that means liabilities in the credit side. This is not the correct method. This is an example, right? But this is not a balance sheet actually. This is an extract of the balance sheet. You can say here, whenever cash is introduced in the business, then that rupees increase, that means the assets have been increased by 10 lakh rupees. Whenever borrowings have been made, 5 lakh also been increased. So this leads to what? Increase in assets. Whenever capital is brought into the business, then owner's capital is also been increased. So that's why we have written a decrease and increase, decrease and increase. Then the capital has also been introduced, that means that has also been increased. Then can I say, whenever we have made some borrowings, can I say that means there is an increase in liabilities? So they have written in the increase side 5 lakh rupees. Now what happened? Rupees 2 lakhs has been withdrawn for personal use. Then it is decrease in asset side. It is decreased from assets point of view, and also capital is also been decreased through the form in the form of drawings. So decrease in asset, decrease in capital. It is also decrease in assets now. Nine. And one more thing, 1 lakh rupees has been repaid by the proprietor The business has repaid the amount to the extent of 1 lakh from the assets, then can I say that it's a decrease in asset also? Then it has also been decreased from the point of view of liabilities. So when I say that this is total of assets increase 15 lakhs, 15 lakhs amount has been increased, and this 3 lakh rupees has been decreased, minus 3 lakhs if we are going to do, then it will be like 12 lakh rupees, right? 12 lakh rupees, right? The same thing which we have also seen here. That means you can show this accounting equation approach in many manners. And you can see increase in liabilities value of total by 5 lakhs, and now 1 lakh rupees has been decreased, then net amount is leading to 4 lakh rupees. Total as capital balance was 10 lakh rupees, from which we have decreased the assets by, that means capital balance by way of drawings of 2 lakh rupees. Can I say that net increase in assets is that means net increase in capital is also 8 lakh rupees? Can I match this total two items, 4 lakhs plus 8 lakhs, 12 lakhs, which is equal to 12 lakh rupees? So with that we can see how we can understand our accounting equation approach also. So this is some sort of summarized ways. First point, which is I can write these are 5 points. Increase in assets are debit. I have already said that increase in assets, debit balance. That means we are debiting that account. Decrease in assets, credit. Increase in liability, credit. Decrease in liability, debit. Simply that is the same thing which they have discussed here. Increase in assets are debits, decrease in assets are credits. Increase in liabilities are credit, decrease in assets are debits. Decrease in liabilities are credit. Increase in owner's capital, capital is a permanent liability. Increasing the permanent liability is known as credit here. Capital is a liability, so we are going to credit that item. Decrease in the capital, we are going to debit the capital account. Increase in expenses are debits, and of course these are also somewhat different. We have discussed up to these 3 points, and we have not discussed about this. This is what I can say nominal account rule, right? Nominal account rule is the same thing that of 4 and 5 points. Increase in expenses are debits. What does it mean? Simply, what is the nominal account rule? Nominal account rule is what? Debit all expenses and losses, and credit all incomes and gains. This is the nominal rule, right? Nominal account rule is this, the same thing, right? Then whenever expenses are increasing, increase in expenses, we are going to debit that expenses account. That is account of nominal rule, account rule only. And of course whenever we are incurring losses, then it is also increasing debit balance, because account nominal account rule. Increase in losses also debit side, increase in losses also debit side. So increase in expenses and increase in losses is debit balance. Increase in incomes and increase in gains, increase in incomes and increase in gains. Gains is nothing but profit, income is nothing but the revenue which we are going to generate through our business. Increase in income and increase in gains will also lead to credit side. That means credit all incomes and gains. So we have been increasing our credit items also. Whenever the expenses have been decreased, decrease in assets is nothing but what we are going to credit that expense account. Decrease in losses is nothing but it is like a gain, we can say. So what we are going to increase what we are going to do whenever incomes are, that means whenever losses are decreased, whenever losses is decreased, then does it mean that it is increase in gain? Whenever increase in gain, then we can say that we are going to credit the transaction. Same like that of these are opposites. Expenses are opposites of incomes, losses is opposite of gains. Of course, gains are also known as profits. Profit and loss you have dealt in lower classes. So whenever we are decreasing our income, can I say that it is an expense? No. Whenever we are decreasing our income, can I say it is an expense? Whenever we are incurring expenditure, then we are going to debit that expense account. Or whenever we are decreasing the income account, then we are going to debit that account, because income balance is what? Credit balance. Decreasing the credit balance is nothing but debit, doing debiting. That means debiting the account will decrease in credit balance. Gains is also having credit balance, right? So decreasing the credit balance is nothing but debiting that same account. Those are the things which we are discussed here. Increase in expenses are debits, decreases are credits, right? Increase in revenue or incomes are credit, decreases are debit. So this is what accounting equation approach is. Now you can see here debit and credit thing. One second. Now you can see when we are going to do some debits and when we are going to do some credits. Whenever there are increase in purchases, we are going to debit. Whenever there is an increase in expenses, then we are going to debit. Whenever there are increase in assets, we are going to debit. These three things we know. Whenever there are increase in liabilities and unknown capital, then we can credit. That means increase in capital or increase in liabilities, we are going to credit that item. Whenever revenue and incomes are being increased, then we are going to credit that income account. Whenever sales is increasing, we are going to credit that sales account. That is why whenever goods are sold, purchases, that means data account add to sales or cash account add to sales, we are going to write our journal entry. This is how we can understand our journal. Now we can, I think, how many illustrations are there? Let us see the number of illustrations. 2, 3, 4, 5, 6, 7. This is the new topic. Eight, 9 illustrations are there. Of course, we are also having 10 illustrations. Okay, that means 8, 9, 10 somewhat different, and of course up to 9 they are somewhat different. What we are going to do? This is somewhat like journal topic now. So can I start with illustration? Okay, I'll start with the previous items only. I'm going to take some exhaustive question, so through which we can discuss both accounting equation approach and both you can also say whether the nature of the each account, like it is an personal account, real account or nominal account. Which this is the exhaustive question of this whole journal topic, and of course traditional approach also. This deals with what? Illustration 5 deals with traditional approach. Okay, 1 minute, friends. Okay, I think you have understood now up to now. 1 minute, wait for a while.